Welcome. My name is Ned Staebler. I'm the Vice President for Economic Development at Wayne State University. I'm also the President and CEO of TechTown Detroit. Both of those organizations are doing everything they can during this time of unprecedented challenges to support our small business community that we know is the lifeblood of our economy. And this webinar was created really in short order, and thank you to the folks on the call, but it was born out of conversations with folks at the DEGC and the SDBA and the SBA that last week we were talking about the number of the similar questions we were hearing from entrepreneurs about PPP loan forgiveness. So everybody, 3 weeks ago and a month ago, we're having the question of how do I apply for the PPP? How do I get this? And now they've gotten it. The question is, okay, how do I make sure that I can maximize the forgiveness from it? I don't want to do something wrong. So some people were not spending the money, and also some people were worried they were spending it, but on the wrong things. And so we very quickly with DGC and SDBA said, we're all hearing this from our clients. Let's get a group together of experts who can answer these questions. Now, as Connie will point out, and I'm sure Tom will as well, guidance is ongoing. So we've gotten some guidance to date. We're going to get more, I think, in the next week or so, next few days even. So one of the things that we are committed to is you've signed up for this webinar. We've collected your information. We will continue to provide you updates via email. And if the changes are significant enough, we'll do another webinar to let you know with some examples how the regulations and guidance has changed and things that you ought to know, because we want to make sure that you have as up-to-date information as possible to support your business as it goes through this challenging time. And to do that, we got a fantastic group of panelists here that, as Carla pointed out earlier, my wife trusts far more than she trusts me, and with good reason, because here they are. Let me give you I'm going to give you the 30-second version because we know your clock is ticking on your PPP and you don't want to spend it all hearing how awesome these people are, and I could talk for hours. But Constance Payne Logan, Connie is the Michigan District Director of the U.S. Small Business Administration. In this role, she is responsible for the implementation of the SBA's programs and services in all of Michigan's 83 counties. She also oversees the SBA's resource partners throughout the state, including 11 regional small business development centers, or SBDCs, 9 SCORE chapters, 3 women's business centers, a veterans business outreach center, and 7 different micro lenders. I could go on and on about the decade she spent in Washington overseeing tons of programs, and she's won just about every award and recognition, including things like the Spirit of Detroit Award. She's also Carla's sorority sister, I'm pretty sure, judging by her bio. So I'm going to stop there. Up next, you're going to hear from Matthew Rolling. Matt is a CPA. He's also the founding executive director of Wayne State's Office of Business Innovation. He's also the immediate past chair of the Wayne State Accounting Department at the Mike Ilitch School of Business. Before joining Wayne State, Matt spent 7 years as director of business development at Rock Ventures. His previous work included time as a turnaround and restructuring consultant for Alex Partners and an M&A consultant at PricewaterhouseCoopers. He's also advised, led, and invested in startups in the education, fintech, social impact, and sports and entertainment sectors. And he has undergraduate and grad degrees from the University of Wisconsin-Madison. And then finally, you're going to hear from Carla Walker Miller, who is the founder and CEO of Walker Miller Energy Services, a 20-year-old value-driven company that changes lives through energy. Her high-performing firm helps electric and gas utilities achieve mandated energy reduction goals, reducing energy waste, creating local jobs, and decreasing energy burdens on families while reducing harmful greenhouse gases. The firm was started in 2000 after Carla's 18-year corporate career in technical sales. She reinvented her company during the height of that recession, successfully pivoting from electrical transmission and distribution equipment sales to the rapidly growing field of energy efficiency. Her firm has had 7 times revenue growth since 2014 and now has an average annual revenues of over $25 million. She's molded the company into one of the largest African-American and women-owned energy waste reduction companies in the country. So with that, we will waste no more time. I'm going to turn it over to Connie, who from the SBA, who's going to help answer some of those questions about what's eligible, what's not eligible, timetables, and the like. And so, Connie, take it away.
So good morning, Ned. Thank you for the opportunity to get before some small business owners to really talk about PPP or PPP. Again, this is a great opportunity for us to really get out and talk about, what's happening right now. I like the theme that you have, what we know now, right? As you mentioned, things will be changing, the regs will be coming out, and Tom McFadden, who's on the screen, he's a business relations specialist on my team, and he's really in the weeds in terms of what we have going on with the regs about PPP. But again, I told Tom I was going to protect him. So I need everyone to realize that if we don't have an answer, Tom will say we do not have an answer. So again, this collaboration that we have with TechTown, as you know, Ned, we have a strategic alliance memorandum. We call it a SAM agreement in the government. So what a great opportunity to collaborate, right? To show that we really have the same mission in terms of helping small business owners. So now I'm gonna take a line out of Oprah's page. So what I know for sure is that there's over $100 billion still left in the PPP. So let's start right there. Over $100 billion still left in the PPP. So if you go back to the first tranche of funds, those funds, the $350 billion, were actually exhausted within 2 weeks. So the second tranche, $310 billion, that was actually allocated back like April 24th. The good thing about the second tranche, SBA and Treasury heard what the communities were saying in terms of small business owners not getting access, minority business owners not getting access. So there was a set aside amount. So we have CDFIs, credit unions, fintechs that now also have the ability to participate in our PPP loan programs. So that's great. So the money is still there. So I'm going to have Tom to really address some of the questions that I'm sure you all are hearing. And again, we ask for your patience. My team is working extremely hard. I just want to give a shout out to the Michigan District Office for all that they do, for their commitment and passion to small business owners. We could not do the things that we do during this unprecedented time. So with that being said, I want to turn it over to Tom, and you can take it from there.
Very good. Thank you, Connie. Yes, I work for Connie as a lender relations specialist here in the Michigan District. And I want you to know that we are really appreciative of Ned and all our partners, throughout the state of Michigan who really are making this happen. We'll talk a little bit more about some of the other resources because I just want to point out how they can help you. And particularly in this case, our lenders. We have been very busy bees here in Michigan. Through the latest numbers I have through May 8th, just in the state of Michigan, we did over 100,000 individual loans for, over $16 billion. So obviously there's no way we could have done that without the assistance of all our partners. And so we're really making a significant difference, in helping businesses, manage during this economic crisis. So very significant money. I want to talk super quickly about PPP. For those of you who have not applied, as Connie said, we have, over $100 billion nationwide still available. We'll get in some of the weeds here, but you know that you have 8 weeks once you get the money to spend on payroll. A minimum of 75% has to go toward payroll, but also 25% can go toward other particular expenses. It says a lease expense, mortgage interest, rent, utilities, and interest on other debt obligations incurred before February 15th. We'll talk a little bit about some of the forgiveness provisions, which I think you'll find is helpful. Maximum amount is $10 million per business. Hopefully most of it's going to be forgiven, but what is not is at a very cheap rate, 1% interest. As you know, for those of you who've successfully gotten money, it's a pretty bare bones application, 2 pages, and then you obviously would bring documentation to your lender, and the lender is going to rely on your certifications. There's no personal guarantee and no collateral on this loan. In terms of what is forgiven under the PPP, we have some general guidelines that are available to us right now. And many of those can be found in 2 places. You can look at our website, sba.gov/PPP, and that'll take you to some detailed information. And then, surprisingly, you can get a lot of very detailed information if you go to treasury.gov. It's very clear, if any of you have seen any of the president's briefings when he was doing those, that we are partnering very closely with the Department of Treasury. You've seen Secretary Mnuchin talk a lot. And so they have really been helping us as a much larger agency get a lot of the details out. So you should definitely take a look at a lot of those interim final rules that are there, and as well as our frequently asked questions. I think we're up in the 40s now. This is a constantly evolving process, simply because we stood this program up in 5 days. We pushed out more money in the first 2 weeks than we typically do in 10 years. And we just, as an emergency program, we didn't have time to sit down and figure out all the details. Now we're figuring out those details. So just in terms of forgiveness, we have some general guidelines, but as Connie has said, and as Ned also indicated, we are waiting for detailed guidance from Washington, which we have been told is an absolute top priority of the agency. But we know that we also have to be very careful in how we put these guidelines out, because it's the type of thing where a missed comma or an uncrossed T could cost all of us as taxpayers billions of dollars. So it's being very thoroughly vetted, but we anticipate that we'll get this detailed guidance very, very soon. Just in general, remember, if you look at the FAQs and at the first interim final rule, that 75% of this money at a minimum has to go towards gross payroll. And so that is not just your net payroll that goes to your employees, but it's also intended that you would utilize this money for payroll taxes, certain benefits, all the, I'm not going to give you an exhaustive list, but that is available to you in our FAQ and in our interim final rules. And I want to, bears repeating that the other 25% max can be used for other expenses, leases, mortgage interest, note interest only, not the principal portion, rent, utilities, and interest on other debt obligations that you incurred before February 15th of this year. So in general, when does that timeline start? It's very clear in our existing regulations that when you receive your first disbursement of funds, that 8-week clock starts. So that money needs to be spent within 8 weeks. And at that time, then after that, you'll be working with your bank, who is going to help us administer this loan after the closing, to thoroughly review and vet your application for forgiveness. And I do want to make it clear, because it's obviously it's not, that not only is the payroll forgivable, but the other expenses, the other max of 25% is also fully forgivable. But you're going to have to show proof of that. So while we don't have guidelines on exactly the documentation that's going to be required, I would say is at a minimum, make sure that you have good records. Just like you had to have records to demonstrate that what your payroll was so you could get to that average monthly calculation, you're going to certainly at a minimum need similar type things. Bank records, if you use a payroll service, they can certainly give you details on that. You would want to have available, certainly for the non-payroll piece, a check register, copies of bills, all that type of stuff. So, at a minimum, your banker or lender, whoever it is, bank, credit union, is going to want to take a look at that type of documentation. So now is definitely the time to make sure that you keep good records so that when the time comes in just, short 8 weeks or less, it's available to you. So I'm certainly ready, Ned. I think we'll do questions, at the end, but that's essentially what I have to say at this point. Connie, did I miss anything?
No, I think after, I guess, the presentation by Matt, we can certainly take questions. Or Ned, you're the moderator.
Yeah, if you don't mind, there are a number of questions coming in here that I would categorize as pretty basic that I think would be helpful to have before Matt goes into his examples. So you mentioned gross payroll as opposed to net payroll. Does that include payments to 401k and matching and things like that?
Yes, it will. There's some details on that that I don't want to necessarily give it all verbally,
Right.
but if you go to treasury.gov and look at the FAQs, there's an explicit list as to what is eligible in the gross payment calculation. That much we do have.
Yep, I will, when Matt starts going, I will put a link to that in the chat so that everybody can see that link to the FAQs, because there's a ton of answers. There are a ton of answers to the questions that people are putting here in those FAQs. I'm trying to answer some of them when I happen to have already read them, but I will put it out there so everybody can read them as well. Along those lines, someone asked or a couple people asked about what the definition of utilities are. So everyone I know thinks electric, gas, water. People know that. But if I'm correct, and tell me if I'm not, I think things like your internet bill counts as well, Tom. Right? What about things like copier leases? Would that count, or is that a gray area?
Well, leases are explicitly allowed, and so that would be an allowable expense, your copier lease.
Okay.
In terms of utility, we don't have any guidance, beyond what that is. I certainly think that anybody could certainly pay their light bill, their gas bill, and feel very confident about that. On the others, I would wait for firmer guidance, to decide how you're going to fund that. Simply because I can't tell you with confidence that that our agency is going to say your cell bill is a utility.
Yep. Here's another one I think is pretty standard. People are asking, for forgiveness purposes, do 1099 employees count, or is it only W-2s?
Only W-2s. The 1099 employees, and this is really an important point, they need to apply for their own Paycheck Protection Program loan. And how they do that and what needs to be included in that is explicit in the FAQs. They even actually go into the detail of lines on tax returns. And by now, many lenders have seen a lot of 1099 employees. So the 1099, the independent contractors can definitely get funds. They simply have to apply for it themselves.
Right. And here's what I think I know the answer to. You said that at least 75% of the amount forgiven must be for payroll. Presumably 100% could be for payroll. That's the goal of it anyway. It's a floor, not a ceiling. So
That's
100%.
Correct. That's correct.
And similarly, You have 8 weeks in which, 56 days in which to expend the funds, forgiveness can be for eligible expenses in those 8 weeks, but it could be, you could, in theory, spend it all in the first 3 weeks or 5 weeks, right? It doesn't have to be spaced out in any way. It's anything you spend in
Absolutely
that 8
not.
weeks. Right.
It just has to
And
be within that 8-week period. Yes.
the last one I'm going to ask here before we get going is about payroll and accrual versus actual cash. A lot of people are asking, is it about the time I spend the money or when the actual work happens? So if I got my money on, say, May 1st and my payroll comes out, I usually pay people on May 2nd for their last 2 weeks of April. Is that okay? Or can I only start paying them for their first 2 weeks of May?
Yeah, that's a great question, and I've had that multiple times. And unfortunately, we don't know if it's, certainly if it's on a cash basis, that's very clear. That is not a problem. If it's on an accrual basis, we have not gotten guidance on that. So, we'll see, because obviously it would be difficult for a lot of companies if they had to have, say if they pay every 2 weeks, they might have to have an extra payroll. So, my guess is that has filtered up, to the policymakers in Washington, and I'm pretty sure that that will be addressed explicitly. But right now, we don't have exact guidance on it. I'm sorry.
So you have no guidance on whether people can pay a bonus or anything like that to make sure they maximize forgiveness?
Yes, we do not have exact guidance on that. My guess, is that it may be allowed, but there may be constraints on it too. We'll just have to see what guidance Washington puts on it.
Hey,
Okay.
Ned, I'd like to make a recommendation. Some of the questions that you're asking that we don't have the answer to, can you capture those questions? And so if we do have another webinar, we'll make sure that we definitely answer those questions as well. Or if we get them in the interim, we can shoot them over to you so you can send those answers out.
Yep, we will try to capture. I think we can download the Q&A, and Rebecca and Michelle, who are sort of facilitating the logistics here, please let me know if I'm wrong on that, and I will capture them some other way while we're going. So with that, why don't we head on? I will tell you guys, a lot of you are asking, is there any talk on extending the 8 weeks or the look back? I absolutely know that Connie and Tom will not know the answer, not be able to say anything definitively on that.
Right.
I'm sure there is talk of it. Whether it will happen or not, my crystal ball is very fuzzy. We all completely understand the issue that you got the money and your clock has started ticking, but you're still on
Right.
lockdown and you can't open up yet. These are problems. People understand that. If I were a betting man, which I'm not, I would guess there's going to be some sort of accommodation made for that. But as of yet, there hasn't been. So the rule is right now 8 weeks. And that's what we're working off of. So let's turn it over to Matt, who's going to walk us through a couple of scenarios that I think will apply based on a lot of the people saying, hey, I'm a sole proprietor and or I have employees and payroll. How does that work? So Matt, can we turn it over to you?
Yeah, no, it's a pleasure to be here. Nice to be here with Connie and Carla, Ned, Tom. I'm going to try to bring a lot of the guidance that Tom shared to life in a couple PowerPoint slides. And so hopefully it will all be a little more clear. Hopefully, it's crossed. So let me just share. Fingers crossed, right? Okay. Okay. So as Connie and Tom both mentioned, this is all crystallizing in real time, and so we're all trying to kind of figure it out together, step by step. Ultimately, it's the interpretation of what's forgiven is it's going to be your lender that is going to be interpreting the gray area, and so if you're comparing notes with somebody in your network who's working with a different lender, you might find different outcomes based on who you're working with, right? I won't spend a lot of time on this page. The clock starts ticking the moment you get the cash, right? There are some rumors, as Ned and Tom just said, that the feds might extend the window, right? So what are you ultimately going to need to provide your lender to get it forgiven? If you have employees, you will need your IRS Form 941, which is the employer's quarterly federal tax return for the quarter that most closely overlaps with the 8-week window, right? Number two, when you originally submitted your PPP application, you provided them with your 1040 Schedule C, right, which shows the profit or loss from your business. And then for any of the interest, leases, or other utilities, you're going to have to provide other documentation. And as Tom mentioned, the rules and interpretations as to what that documentation will ultimately look like is still up in the air. So we're going to cruise through two examples. One for an employer that is the sole proprietor, which I guess would make them not an employer. One for a business that's a sole proprietor, and one for a business with employees. If you're a sole proprietor, this is pretty simple. You already gave your lender last year's Schedule C, right? Everyone knows that for the 8-week window, you're probably, whether you pay yourself with owner draws or you put yourself on the payroll, you know, they know that you're probably going to show a loss for this period of time because of the lockdowns, right? Because of the virus. And so it's pretty straightforward. You take your profit row from last year's Schedule C, and you divide it by 52 weeks in a year, and you multiply it by 8 weeks of forgiveness. So, for example, if you were a sole proprietor that was making, you know, we're just going to use $100,000 or more, right? Because the max salary is $100,000. You'd have payroll forgiveness of $15,385. That's $100,000 divided by 52 times 8, right? And now, as we've mentioned multiple times, your 75% of the forgivable portion of PPP must be used for payroll. And so for all of you algebra fans out there, all you have to do is take your payroll number, divide it by 75%, and that grosses up that number to give you the 25% that you can use for rent, interest, utilities, etc. Right? So I'm going to move something on my screen here a little bit, right? So in this example, the sole proprietor makes $100,000 a year. So they submitted a PPP request for $20,833, right? 2.5 times their monthly payroll. And so in that scenario, right, they would be eligible for $15,385 in forgiveness for their own payroll. And when you gross that number up, you get $20,513 in eligible forgiveness. So that proprietor would have about $5,128 available to them for rent, interest, leases, utilities, etc. In this example, there is a tiny sliver of $320 that would not be forgiven, right? So for all of you sole proprietors, you know, keep track of your rent, your interest, your leases, your utilities through your 8-week window, right? And also, it's probably wise for you to transfer, once you determine that amount of forgiveness that you would have for yourself for the next 8 weeks, it's probably a good idea to transfer that money to your own personal bank account. If you have employees, it gets a lot more complicated. The way, at least my interpretation of the guidance thus far, there's kind of two hurdles, tests, analyses that you really have to pay attention to. Otherwise, it can end up, you know, kind of greatly diminishing the eligible portion of your PPP loan that can be used towards payroll. One is headcount, and the other is reductions in salary or other compensation, right? So, you know, if you have any business that's non-essential, you've probably had furloughs or layoffs or terminations in order to just keep your business alive. And so the whole point of PPP is to preserve payroll as much as possible. So these two tests can be very difficult for an employer to cope with, right? Ultimately, the first is the FTE count, right? And so they're really hoping, I shouldn't say hoping, in order to maximize the forgiveness, you have to have the same number of FTEs for the 8-week window that you did from either 2 different look-back periods. One, February to June of 2019, or you can use the first couple months of 2020. Now, the rules do include a little workaround that says if you are able to get your total number of FTEs back up to that number by June 30th, 2020, and you can even offer furloughed, laid off, or otherwise separated employees the chance to rehire. And if they turn you down, I guess you can still count them in your average FTE count. You are able to preserve your eligibility for the FTE count test, right? If you fall short of it, which I imagine a lot of people on this call are worried about because you did have to reduce your head count due to lockdowns, your potential FTE forgiveness is reduced on a proportional basis, right, based on the reduction in headcount. And so I think we've got a little example here on the right. I'll show you, right? So imagine pre-COVID-19, you had 10 FTEs with average gross salary of, or average payroll of 50K a head, right? Your PPE request would have been 500 grand divided by 12 times 2.5, or about $104,000, right? Now, if during the payroll period, you'd reduce that to 6 FTEs, right? But you'd maintain their gross payroll at that same $50,000 level, and assuming nobody over 100 grand, right? No outliers here. If you took that 6 number, you'd reduce your cap on payroll would be $46,135, and again, grossing that up by dividing by 0.75 or 75%, your total forgiveness eligibility would be maxed out or capped at $61,538. And that same proportional reduction occurs if your employees, if you've reduced wages for any of your employees by more than 25%. So there's 2 ways they're trying to ding you here. One is headcount, and one is reducing salary and wages, right? And with the salary and wages test, you also have the opportunity to avoid that reduction if you are able to bring people up by June 30th. So, I guess the overriding point of the slide is don't get too concerned about where you're at today. Just focus on trying to do the best you can to get payroll and headcount back to where it can be by June 30th. But, and this is really critical, you shouldn't be making decisions in order to maximize your loan forgiveness because it doesn't really help you if you bring somebody back on payroll just to get a couple quick bucks, and then 2 or 3 months from now you have to separate or lay off or terminate them again anyway. And oh, by the way, 2 or 3 months from now there might not be an extra $600 in federal UIA available, right? So you might really be impacting people's lives. So more so than trying to game the system, you should be trying to get your headcount right to run your business. Okay, a couple quick more points. Sorry about that. Okay, a couple of quick more points here, right? It's important to determine, and all of you probably have bookkeepers or accountants or HR experts or payroll account managers that can help you with this stuff, right? Right now, right, you can take the total base salary and wages for all of your employees for the last quarter, right, before you receive the loan, right? Note any employees whose salaries have been reduced, right? Or anyone that was making more than $100,000 in 2019. Track the amount of reductions in wages and salaries for any of these folks, right? And again, the demarcation line is June 30th. So hopefully, barring anything, I mean, who knows, right? Who knows what's going to happen at May 28th when Michigan is supposed to end down. It's really anyone's guess. But for now, the line in the sand is June 30th. Okay, what about the other 25%? What about the interest and rent and utilities? You know, and Tom talked a little bit about this, that the guidance on these items is still not super crystal clear. I read FAQs from a local lender, and just based on my interpretation, I kind of developed these 3 guiding principles, right? It seems to me, you know, I don't work for the SBA, I don't work for a bank, that they have to be cash costs incurred during that 8-week window. They have to be related to services or contracts that were in place prior to February 15th. And they have to be items that would have been eligible for deduction on your tax return, right? More to come here. If I were a business owner and I was putting together a forgiveness application with my lender, I would let them tell me that something's not eligible. I would err on the side of inclusion and let them kick it out, right? To let them tell me that my equipment lease, expenses aren't eligible, right? Okay, 2 more slides and I'll be done. What can you do? Calculate your payroll costs for the next 8 weeks, right? Take out anybody over 100 grand. I shouldn't say that. Take their portion, the portion of any salaries above $100,000 out. You can keep up to the first 100,000, right? Check that payroll number against your 75% threshold for loan forgiveness, right? Get on the same page with your payroll processor, right? Make sure the amounts you're expecting are going to be paid with PPP funds, right? Figure out your average FTEs for the look back test dates, right? In February, in 2019 and 2020. Estimate your rent, interest, and utility amounts that would be eligible for forgiveness. And obviously keep in touch with your lender. A couple more bullet points. It's highly recommended that you put your PPP dollars in a separate bank account. It's going to make your life a whole lot easier if you don't commingle the funds, right? The CARES Act, here's something that will make your head spin. The CARES Act explicitly states that PPP loan forgiveness is not income for IRS purposes. However, right, because if you think about it, if someone forgives a loan for me, that should be income, generally speaking. However, the IRS has said, the IRS's guidance is that expenses related to PPP loans are not deductible. So you end up in the same place, and you will, unless the IRS changes its stance on this, you will have a significant tax impact for any PPP amount that's forgiven, right? Spend as much as you can on payroll. Interest will still be accrued at that 1% rate, but it can be forgiven. There's a link in the presentation to a PPP calculator. And remember, even if you can't get forgiveness, a 1% loan for 24 months isn't a bad deal, right? There's no personal guarantee. There's no early payment penalty. And if any of you are really that worried about the money, I will borrow any PPP money at 2% from any of you that don't want it. So that is what I've got for now, and I'll hand it back off to Ned.
Sorry, I was on mute. Yeah, your slide says on to Carla. So why don't we head right over there and let Carla talk about that. Specifically, Carla, if you could, Matt made a couple of suggestions from a business owner's perspective. And I know that you run a very successful small business. You've gotten a PPP loan, and you and your finance team are right now making some of those really hard decisions about how do we best use this to maximize forgiveness, but also to maximize the best future of your business as well, because that's that's obviously more important than just trying to game the system on forgiveness. So, Carla, with that, I'll turn it over to you.
Yeah, thanks, Ned, and thanks to to TechTown, SBA, and Wayne State for hosting this. One of the things I want to say is that how you use a PPP loan, part of it really depends on your culture. We actually struggled to continue to pay our team for 5 weeks before we received money in the first tranche. And because we have exactly the team we want and wanted to preserve their livelihoods, we're paying our team full salary so that when we start up again, we don't have to train new people. We don't have to go through. It's going to be hard enough just dealing with the changes required for safety and our new normals. And we didn't want to have to start that with bringing a new team in. So one of the things that the PPP has done for us is it's allowed us to even stabilize our team loyalty. If you pay someone who cannot possibly work for 8 weeks, then it says to them that you value them. So getting this money was really important for us. I don't want to use a whole lot of time, but the other thing is there are a lot of opportunities to defer costs. And I encourage everyone to really look at the benefit of deferring for a couple of months to you versus using PPP loans to pay some of those costs with that 25% that's not payroll. Because one of the first things we did was rush out to get deferrals on our mortgage interest and some other things that can actually be covered under the PPP loan. So I really appreciate, Ned, you all doing this because the advice is very company specific. The last thing is I want to urge everyone, if you know entrepreneurs who have not applied for this, please encourage them to. I've been in business for 20 years, bankable for less than 2. And this is the best opportunity out there and one that we may not see again. As Matt said, 1% interest for 2 years is, you can't get that anywhere else. We have entrepreneurs and business owners who are struggling with grief, just trying to make it every day. So for those who have not, have challenges and barriers to the application, let's just be really open and transparent as a community and bring those people into the fold so that we can help them go after this money to prepare them for the future. Thanks.
Unmuting again. Thanks, Carla. That's great. We're getting near the end of our time, but I want to check a couple more questions for folks that people are asking here. One is around FTEs. Now, I know that for according to FAQ number 36, for eligibility, you count a part-time employee as a employee. But for forgiveness, you have to change that up, and they use the FTE equivalent. Tom, can you explain that a little bit? What's a week for that? Is it 30 hours a week, 40 hours a week?
Yeah, we haven't gotten exact guidance on that, but generally, one full-time equivalent is one person working 40 hours a week. So that would be, I believe that will, when the final guidance comes out, that will show that at 40 hours.
So 2 20-hour a week or 1 FTE is what you're telling me.
That's correct. Yes. Yeah. If I could make just a couple of comments too, and I just appreciate Matt's comments were very helpful, unofficial, but I think they'll be useful until we get more detailed guidance. A couple things I do want to say is remember, and Carla really underlined it for me, is there's no work requirement here to pay.
Yes.
There is no documentation that people actually have to show up, do work, whatever. All you have to demonstrate is that you have paid them. And that is, in part, Carla really hit it out of the park when she said, we want you to help people maintain their lives. We want businesses to remain resilient because they've kept their team together. And so that's a really important provision of the PPP that is not always clear to people. I also want to talk a little bit, because it is explicit in our FAQs, with regard to offering to rehire people. That offer needs to be in writing. So make sure that, when you are offering to hire people, especially if they're not, willing to come back for whatever reason, that you've got it in writing. It's not clear if their response needs to be in writing, but I would try and get an email if they're, telling you no, or at the very least for now, keep a phone log of, I talked with Betty, she can't come back to work for whatever reason. And then you will have some kind of documentation on that. And then, as Matt very clearly showed, that'll help you maintain that head count and, increase your forgiveness. That's our understanding. And also one other thing, Ned, thanks for indulging me here, is I do want to talk about SBA loans, existing SBA loans before Paycheck Protection or even a new regular SBA loan. Those payments are being made by the federal government to your lender on your behalf. So if you have an existing or you're contemplating a non-emergency SBA loan, you will get 6 months of payments made by the federal government. So if you need to take advantage of that, please contact your lender immediately because that will obviously free up cash flow for you. So I want to make sure that you do that.
Tom, could you answer one more question? Because we've got a lot of those on this thread, and I've got them from other people. The PPP and EIDL, if you got an EIDL grant and or loan and you got a PPP, how do you reconcile those?
Okay, well, understand, because I think the EIDL is a great program, but right now we're not taking applications except for agricultural businesses and for those very, very few early applicants whose original application number started with the numeral 2. So those are the only instances where we're actually opening up EIDL. It's possible it could be opened up again, but we've had no promises.
So I'm getting some specific questions both here and in my other world of, I got an EIDL. Is that reducing my forgiveness amount of the PPP that I just got? And there's the FAQs talk about refinancing your EIDL as part of your PPP. But I had one client who called me and said, I got my EIDL and my PPP on the same day. So how does that play?
Well, there are two different parts to the EIDL, and it's really important to understand the difference between the two. There, as part of the CARES Act, EIDL was modified to give a grant of up to $10,000, calculated on the basis of $1,000 per employee. And those who have gotten that money have been very surprised because we don't send an email, we don't send a letter. All of a sudden, somebody will look at their bank account and say, oh, I got $4,000, or oh, I got $7,000. That money is not impacted at all with the PPP calculations, and that money is already forgiven. So that it is a true grant.
Okay.
Now the remainder of the EIDL that's much more like a conventional commercial loan. We're going to underwrite that for creditworthiness, cash flow. Obviously, we're going to look at cash flow under a normal economy. The rate is for a for-profit business is fixed at 3.75%. But it's paid back over 30 years with no payment for a year. One of the advantages of having the EIDL, and you can have both a PPP and EIDL, is that the use of funds for EIDL is much broader. So, if that becomes available, or if a person has already applied and we get back to you and make an offer, certainly it's something that every business owner should consider. One of the things that's important is that your EIDL loan, if you've received it, will be reduced by the amount that you said you were going to use it for payroll. So, and that's explicit in the calculation that you would see if you look at the SBA forms for the PPP application. So I would say for the most part, for those who have applied for EIDL or who may have the opportunity to apply in the future, look to use as much of that for non-payroll expenses because you can use it to pay your trade, any expense that you would have been normally able to pay, except now you can't because your revenues have dropped so severely. All those kinds of regular business expenses are eligible under EIDL. So, that can be a really great opportunity. We'll just see if it gets opened up again. It's more, PPP is really meant to be a very short-term 8-week fix, help get us from point A to point B, whereas the EIDL program is designed as a longer term solution. So, we'll see. Congress is cooking up lots of new ideas. We'll see if they, get additional funding for that. There are a lot of different things that may happen here.
So if somebody got a check in the bank and they're not sure exactly where it came from, it's probably an EIDL grant. It can be used broadly, and it's not going to affect their PPP status at all.
That's right. Yes,
Okay.
because if somebody is offered an EIDL, they'll actually hear from our Office of Disaster Assistance, which is running that. There'll be all kinds of documents to sign, including a personal guarantee under the EIDL. There'll be there's collateral for the EIDL. It's a much more typical commercial loan closing. You won't just see money dropping into your account.
Gotcha. Got a lot of questions, even one out from, looks like New Mexico, asking us about documentation. How do I show my owner's compensation replacement? What do I use? Can I use a document out of QuickBooks just to show that I took an owner's draw? Is that, I mean, obviously it's going to depend on the lender, but presumably, Matt, that's what you would recommend, something like that?
Yeah, I mean, I think that's absolutely correct. I mean, you can show your owner draws from QuickBooks. I mean, you kind of think about the documentation that, Tom said it in the beginning. The lenders are looking for the borrowers to self-certify, and so I think QuickBooks journal entries are, I think that gets the job done for an owner's draw.
That's a great question. Actually, we were talking earlier, and I put in the comments a link to the most recent SBA FAQs on this. Literally, new ones came out about an hour ago. And they only answered one question, but it's an important one that I've been hearing a lot from people about safe harbor. So tomorrow, I think, is a deadline for people to return the PPP if they were not probably supposed to have gotten it in the first place, and there'll be no penalties associated with that. And a lot of smaller businesses have been saying, oh no, am I going to get caught on that? Well, the guidance that came out was, are they going to get caught on it like a Ruth's Chris or a whoever the other big ones were, that were out there in the news, everyone heard about Shake Shack or whatever. Yeah. The guidance is that, per question 46, any borrower together with its affiliates receive PPP loans with an original principal amount of less than $2 million will be deemed to have made the required certification concerning the necessity of the loan request in good faith. So basically, if you're a small business who only received a few $100,000, but you have some money in the bank and you're worried that they might say, oh, you should have used that money instead of applying for PPP, I think it's safe to say, don't worry. They really did mean that for the big guys out there who were public companies with hundreds of millions of dollars in the bank, and we're also trying to get $5 million from PPP. So,
Ned, I am so impressed. You're timely. I mean, question 45. Your wife would be proud of you.
I've got you on refresh. I got you on speed dial. We're checking you out all the time.
Very good.
I think it's worth pointing out. I mean, Ruth's Chris didn't do anything wrong. They were totally eligible for PPP. They just were losing in the court of public opinion, right? And so, that's really what this boils down to many times, is how the consumers and how people feel about whether or not you're deserving.
Yeah, absolutely, Matt. That's a good point.
Connie and Tom, to give you guys a lot of credit, because putting together a $300, $500, now $600 billion program in the matter of a few weeks is really, really hard. And of course, you can't create a regulation for every potential scenario, especially when your goal is to get the money out the door as quickly as possible, to get money in the hands of small businesses right away so they can provide loans. And there were those cases of Ruth's Chris or whatever that hits the news, but the vast majority of these loans, 90% of them, went to the real small businesses that they were trying to hit, that you guys are trying to hit. So I give you a lot of credit for dealing with probably a lot of angry people who are frustrated and stressed at times and saying, where's my money? I'm losing my business and you guys are doing it all wrong. When the reality is you were doing a lot of it very right. And the fact that this PPP is a grant program and not a loan and whatnot, is absolutely fabulous and has helped a lot of our small businesses survive a time that we never could have really anticipated. So I want to thank you on behalf of small businesses in Detroit for all of the work that you guys are doing on a day-to-day basis. Matt and Carla, thank you so much for coming and giving your insights here today. I know that from the comments I'm seeing from people and the thank yous in the comments, it was very well received. I got confirmed, we indeed can get a download of all these questions. So we will do that, and we will send them over to you guys so that if you see something that you want to update us on more, we will do that. And we will also send out to everybody who's an attendee a video of this, a recording of this. So you get a link to the recording. We'll make sure you get Matt's slides so you can walk through those. I'll also recommend, there are a lot of good calculators out there. I know Paychex and Paycor both have them out there that are free and available to use. So you can plug in your numbers and play with them a little bit to see how you can maximize your forgiveness. I'm doing that almost on the regular as we get new bills in, just making sure that things are going to work. I highly recommend you do that as well. And we'll try to put some of that stuff in the email we send out. And then finally, if things change real significantly, I'm Connie and Tom and Carla and Matt, I'm calling you out right now. We're going to call you back and ask you to give updates again if we need to. But it's 12
we would love to.
Thank you very much.
We would love to. Can I share one last thing, Matt? We would love to. And again, thank you so much for giving us the opportunity. And I do want to share, as I mentioned earlier, there's over 100 billion still left. So if you have a concern about, how do I apply, I want you to email michigan@sba.gov, and that's michigan@sba.gov. Because our resource partners, SBDC, Women's Business Center, they're part of our team, and they can help you walk through that PPP process, answer questions. So let's use that money. Let's get that money in the hands of small business owners and nonprofits.
Can we get another one?
No.
No? Okay. And that's also a great note. I didn't get a chance to ask a lot of this very specific questions that people are asking here. If you still have very specific questions about your business, you can go to techtowndetroit.org. We have an Ask an Expert portal and an open office hour portal where you can get some one-on-one coaching for 30 minutes to ask some of those questions to people that you have very specifically about your business from experts. So again, techtowndetroit.org, and you'll see small business resources, Ask an Expert, open office hours. With that, thank you very much, everybody. We're going to sign off now, but stay safe, and we'll see you soon in person.
Okay.
Thanks, everybody.
Thank you.
Thanks, everybody.
Take care.